What's going on, everyone? This is Jordan with Conquer Trading and Investing. In this video, we're going to be talking about Bitcoin, specifically Bitcoin lagging behind the market, if that is signaling a potential reversal as Bitcoin trades towards that 25,000 resistance. Right now, we know that we have things like the uncertainty of the Mt. Gox potential release of 140,000 Bitcoin. We also have a few other things overhanging the market coming into this Wednesday. We do have the Federal Reserve's meeting minutes from last month. That is something that could release a potential new communication to the market that could kind of disrupt these current trends. We have at the end of the month, August 25th and 27th, the Jackson Hole Symposium that has been used as a mouthpiece by central bankers, specifically the Federal Reserve, to communicate a possible or potential change in Fed policy coming into the end of the year. First week of September, we have non-farm payrolls. Then we have, followed by that, CPI, a very important CPI reading. And then later in the month, the next FOMC meeting. Until the market, I'm going to make this pretty easy for you, by the way. If you're new here, welcome. And if you're not, welcome back. In this video, we're going to be talking about Bitcoin. If you enjoyed the content, please go ahead and hit the like button. Consider subscribing to the channel. If you are really interested in honing in on how to improve your trading and want to do that surrounded by myself and the people that I work with, check out the training link below. I do not know anything in the markets that begins to compare for what we do and what we offer. Let's get into the charts right now. I'm going to move over and take a look here at Bitcoin. And what we are first looking at is how Bitcoin is lagging the market. Before we even go that far, I just want you to notice, you can see that right now. This is over here where Luna capitulation, that is right where the market is currently running into a little bit of support here on this Monday, 25,000. Now, right above that, 25,200, there happens to be a lot of liquidations waiting on the short side. This is where a lot of people have set their stop losses. And right now they're feeling pretty good about that. They have a little bit of they could breathe. We're going to talk about that in just a moment. What I want to start off talking to you about right now is Bitcoin and Bitcoin lagging the markets. Now, when we say lagging the markets, I want to look at that and view that from a couple of different points. Over here, you can see this is where the bottom of the NASDAQ was put in. This was put in actually on a very hot CPI print, a 9.1. And since then, you could look at the NASDAQ up 23.5%. It's not just the NASDAQ. It's also, take a look at the S&P 500. That is up 18, almost 0.5%. And you could look at Bitcoin and wonder, well, why is it lagging ever since that date over there? That was July, let's say July 13th. Bitcoin is up 27%. One thing that I want you to notice is that Bitcoin bottomed a little bit earlier. It bottomed towards the middle of June. It bottomed off of the 3 arrows and the Celsius contagion and all of the forced sellers in the market. And Bitcoin is up 38% since then. If you take a look at the NASDAQ and you go to that area over there, you can say, well, the NASDAQ is only up 18% since that particular time. And then you could say that, well, the S&P 500 is only up 12%. And with that type of perspective, you could say that, well, Bitcoin is actually doing what we would expect it to do when risk is rallying. First of all, it is sniffing out the bottom ahead of the markets. And then on top of that, it is performing well. 38% off the low in just about 6 weeks is really not lagging. It is really nice. And why risk is rallying, don't forget, it wasn't that Bitcoin is alone over here. We are looking at risk markets. You could see here in the equity markets, they are currently undergoing a rally. Whether or not this is nothing more than a bear market rally, whether or not this is actually the start of a new bull market, it's really, you can't make those type of determinations in this current macro. We are data dependent. What we are looking at right now is nothing more than a relief rally, a bear market rally. How far it goes and whether it becomes something else, that's all to be determined by the weeks and months ahead as we continue to see, as we talked about at the beginning of this particular session, upcoming important high impact news events. including communications from the Federal Reserve out of Jackson Hole, including the meeting minutes released this Wednesday, including next month's CPI, and of course, non-farm payrolls. All of those are going to help determine how far this current rally moves and goes. And it's also dependent on things that we're watching or helped us go ahead and see this turn occurring in real time. That was following things like oil and watching as things that were causing a large portion of that hot CPI reading, oil, food, and energy, watching them come off 20 and 30%. And then us making the assumption that we should start seeing actually a near term, maybe an intermediate term peak in inflation. And we have to watch those things going forward. If we start seeing oil rising, if we start seeing oil making new 12-month highs, those are going to be signs that inflation is going to begin running hot sooner than expected. And we would expect a response from the Federal Reserve to change that current, let's call it a soft pivot. Now, a pivot, as far as I define it, is moving to a pause. A pivot is not going ahead and cutting rates to zero and restarting quantitative tightening. Generally, what happens is first you go from rate hikes to a pause. This is where risk rallies. And then you have maybe a cut. Risk again may rally on that as well. And then when you start cutting rates quickly to zero, that's usually when the markets are in turmoil. The Federal Reserve is getting ready to cut down towards zero so that it could restart its QE program. Bringing it back to Bitcoin, I want to take a look at what's going on in front of us. Let me jump over back to the chart. And I just wanted you to see, although you're hearing a lot that Bitcoin is lagging, it's not really lagging this current risk rally. Actually, it started, or it sniffed out first, the risk rally. It's been rallying, let's say, pretty in line with what we would expect expectations to be. You could definitely say ever since the July CPI that equity markets have been rallying at a faster pace and a sharper trajectory. That's all true. But again, don't forget, Bitcoin bottomed first, is up substantially since it bottomed, and that Bitcoin has, let's call it, an unknown hanging over its head right now, and that is the potential upcoming release from Mt. Gox and potentially 140,000 Bitcoin. You could say that in regards to Ethereum, Bitcoin is lagging, and yes, it is. And you could see that off the low, Ethereum up 114%, coming off to that CPI in June. You could say that, well, Ethereum's up 85%, and Ethereum is significantly outperforming Bitcoin. Now, we expect that when risk is rallying. Remember, we refer to Bitcoin as the rising tide that lifts all boats. And when that tide is rising, as you see Bitcoin rallying almost 40% off of its low, you could see that as it rises, all the boats begin to rise. And that's why altcoins and Ethereum are outperforming. Ethereum also has, obviously, a little bit of an extra oomph coming into the merge. We're going to talk about that in our next session together. Right now, I just wanted you all to be aware and put into perspective of what's going on over here at Bitcoin. Perhaps or potentially we could take a look at some of the technicals and help us determine whether or not or when this rally might indeed be faded, when it's time to go ahead and sell the rip. To do that, I want to go ahead and reframe your perspective. I want you to take a look at the NASDAQ, and I want it to for you to take a look at it in this light. And you could see that right now we're looking at the NASDAQ breaking out of this descending channel. Now, that's a bullish event. That's a bullish breakout, and this could carry up much bigger and much longer than people expect. Now, I went ahead and I put in this line over here. This yellow line is, if you notice, it is the low right before last week's CPI print. Last week's CPI print sent the markets not only to rallying, but rallying, breaking out of this channel, retesting it, and now resuming off. As long as price is above this yellow line over here, that says to me that structurally, this bullish breakout, this technical change in the markets is well underway, and there's no reason to try to fade it at this point. maybe potentially if price is able to get above that April high. This was FOMC. Pay attention what I just said over there, FOMC. I'll tell you about that in 1 second. And that strong rally that occurred, and that rally that was sold very quickly and sharply. Price getting around that level, and you might see that offering an opportunity if we see any type of technical breakdown to reestablish shorts. But notice this rally came off the FOMC. Notice this rally over here, this breakout came off the CPI. Notice this one over here. Let me go ahead and move that over here. That also came off of right over here, the CPI in July. And what we are seeing is the market reacting to very important events taking place. We don't really have anything aside from the Fed meeting minutes in front of us, and then through the end of the month, which could be an important one. We'll have to pay attention as we get closer to the 25th and 27th of August at Jackson Hole. But right now, we have to follow price and price alone. Every reason for this current momentum to continue unless we see something new introduced to the markets. By having a level you can manage your risk off of, you'll be able to stay on the right side. For the overall rally that's taking place right now, and for myself on this bullish descending channel breakout, it is that pre-CPI print of last week. As long as price stays above it, the bulls here get to continue and have not only structurally a nice bullish rally taking place, but every reason to continue it and not to fade it. You want to wait and pick your points when it's time to fade this rally. A lot of people right now are looking on Bitcoin. They're going ahead and they're doing something like either this, or maybe they're looking at it like something like this. And they're saying this would be pretty aggressive. I'm going to back off that for you right away. And they're looking at it and they're saying, well, if price breaks down below here, and by the way, that would also be below last week's pre-CPI print, they're going to go ahead and reestablish their shorts. From a risk to reward ratio, from a risk to reward basis, that makes a lot of sense, right? In this example, if you had a trigger of price breaking below that level, you could go ahead and you could say, all right, where a lot of people currently have their stop losses right above this area over here, right above where price peaked out in the last 24, 48 hours, I could set my stop loss over there. And then I could say that this distance is roughly equal to where price made that all-time low. If I was risking maybe 5% of my account on that, right? That seems like a good risk to reward, because if price breaks down from here, we would expect the next leg to go even deeper. And that's if you were to take some type of trade like this, and as price, if it broke down over here and it continued and it was retesting that low, at that point, instead of keeping your risk to reward, right, 1-to-1 into that support, go ahead and move this stop loss to break even. Right there, you automatically have improved your overall risk to reward. And then if it goes ahead and it breaks down on any type of retest and resumption, you could go ahead and move your stop down lower again. When we're looking at Bitcoin, as we're looking and viewing Bitcoin ever since that low over here, most of our trades have been on the upside. You could see that was after taking some big trades on the downside. More or less, though, Bitcoin right now has been pretty much break even, not able to extend any gains ever since the large gain that was taken on the short side over here into that June low. And that's a good place to be, going ahead and staying as close even to break even as possible throughout this time until something more is given by the markets. Profits have come and are coming obviously from Ethereum on the long side, similar to Bitcoin on the short side. Lots of profits made over here on the downside into June, but an even greater amount of profits have now been made on the upside, holding this significant position. I want to talk more about Ethereum with you tomorrow as we talk about what is happening going into the merge, what our expectations are, and how to trade it. Listen, thanks for being here. If you haven't had the opportunity yet to go ahead and hit the like button or subscribe to the channel, please go ahead and do that now. Any comments you have to add to the conversation, please add them below, always after I upload a video. anyone that's taking the time to comment, I want to be there and make sure that I could give a proper response. Thanks for being here, everyone. I hope you have a beautiful day. I'll talk to you soon.